Hi everyone, hope you guys are all having a great day today. And in today's video, I'm going to cover BlackBerry stock because they have the Q4 earnings for fiscal year 2025 coming out on April 2nd, 2025. Press release came out. This time around though, the earnings call will be, and numbers will be released pre-market. So 8 a.m. is the conference call at Eastern time. As usual, I will be live streaming that on my channel. So if you want to be notified when I do, consider following and subscribing. And I typically usually cover the numbers as well because the numbers get released about 10 minutes, 15 minutes before. And I go over them, do potentially year-over-year comparison, quarter-over-quarter comparison, and look over the fiscal year numbers or compare them through street estimates. But this time around, because it's a little bit early, might not have enough time, but I'll try my best. But again, if you want to be notified when I do live streaming, because I will be live streaming the conference call for sure, consider following and subscribing. Also in this video, I want to go over or show a video as well. The CEO of NVIDIA going over the workings with GM and NVIDIA in terms of autonomous vehicle driving. And he basically states that in terms of, like, in essence, the importance of safety, goes over that. And I want to show a press release dating back in 2018 with BlackBerry and NVIDIA. We already know that they've worked together, they worked with each other in terms of, for example, safety, but I just want to show the press release. So show the video, show the press release, and then show NVIDIA's website, showing specifically some of the key points, and at the same time showing that there's still partnerships. On the website of NVIDIA though, in terms of partnerships, it's not listed as BlackBerry, it's listed as QNX, but obviously QNX, BlackBerry, same thing, all that stuff. And then also in this video, again, I'm going to go over what you could expect for Q4 earnings in terms of the forecast they provide, plus the compare it to street estimates, do year-over-year comparison, quarter-over-quarter comparison, and in terms of what are expectations for the most part. And then also want to go over some technicals at the same time and show the movement of the stock and where we could expect it to go up to or down to, and then the hurdles and objectives basically to get passed through for the most part in terms of price actions and all that stuff. Now the next thing too, also given that it's tax season, consider using Free Tax USA. I have a link down below. It's free tax software, just like TurboTax, goes through the questions. The only thing is, and then free federal filing as well. The only thing is for state filing, it is $15, but it's cheaper than TurboTax. TurboTax is about $20 for state filing. But at the same time, if you file closer to a filing date, it is $25. I've used them in the past before, compared them to TurboTax and Free Tax USA, the exact same refund got, no difference whatsoever. And then the link down below does help out the channel, so thank you so much for that. I do appreciate it. No extra charge to you. It's just basically, I do get a small kickback. I think it's like $1.50 or I'm not sure 100%, but give or take about that. Thanks again for awesome support. Appreciate it. And basically, I'm going to go over first what they've provided in terms of I'll go through technicals first. I'll go over the numbers first, I guess, because that's the most important thing. And then I might go over the technicals or the NVIDIA stuff and then the technicals, if that makes sense. So in terms of the earnings coming up, so they did provide us basically an outlook in the beginning or in Q3. So during Q3, which was released in December of 2024, they gave us an outlook that what we could expect for Q4 for fiscal year 2025. And they stated that total BlackBerry revenue should be coming in between 126 to 135 million. Now that is unfortunately on the low side a little bit, just because, for example, street estimates, if we look right about here, ticker symbol BB. By the way, I'm going to be looking at all the US stuff in essence, by the way, in terms of like share price, US currency and all that stuff. But street estimates about 137 million, so 138, 137 million. And if they don't end up, for example, surpassing their estimates, then they'll fall short of street estimates by a little bit, which it would not be ideal, because I'm going to show a couple more things as well. We ultimately want to beat this for sure, because if you look at last quarter and last year's earnings, it's going to be essentially quarter-over-quarter drop and year-over-year drop, but I'll elaborate more. Now, if we look at the Q3, so just previous quarter, again, we expecting, let's say on the high side, I'm expecting them to beat the 135 personally. That's just my opinion. By the way, I'm not a professional, so please do own due diligence and research before buying and selling. And I do own shares in the company, so be mindful of that while you're watching this video as well. Now, if we look at Q3 for fiscal year 2025, again, reported on December of 2024, total company revenue came in at 162 million. So even if they do get the 135, let's just say 140, they're going to have quarter-over-quarter drop, but it's not, or quarter-over-quarter decline. But it's not a big deal, because you could argue that in terms of the business, it's seasonal, like in terms of seasonal cycles, right? So it's not a big deal. But the year over year, that's the biggest heavy hitter in my opinion. But either way, let's say you got 140 million, you would beat street estimates because the 137, 138 versus the 140. The only problem is you have quarter over quarter decline. Now, you could argue because they sold Cylance, yeah, there's the cybersecurity is taking a hit, which switched over from cybersecurity to secure communications not revenue, but secure communications. So previously the division was called cybersecurity. Now it's secure communications without Cylance, and you could argue that hit is obviously lowering the revenue coming in for the quarter, right? Now the thing is though, if you compare it to last year's quarter, last year's same Q4 earnings, the same cycle, they had 173 million. Again, you could argue Cylance is taken out of it. Maybe that would argue have a hit, and there should be adjustments for that. I'm not saying there shouldn't be adjustments. There definitely should be, but obviously you want to still see growth and then at least a flat line for the most part. But either way, total company revenue for last year's Q4, which was reported, if you want a specific date, it was reported on April 3rd, 2024, almost same day, and it came in 173 million. So even if we got the 140 million, we would have a year-over-year decline, quarter-over-quarter decline, and then only beat street estimates. So essentially what we need, hopefully, if this is the case, or if in an ideal situation, have 180 million. So that way for the quarter, Q4 fiscal year 2025, because if we have 180 million, we have year-over-year growth, quarter-over-quarter growth, surpass the outlook that they provided, and beat street estimates. There's a possibility, but I am not that optimistic in a way. Now, actually, wait. Scratch that. Technically, what's going to happen, actually, which I kind of forgot a little bit, is because they sold Cylance, Arctic Wolf, and all that stuff, or to Arctic Wolf, there's going to be an $80 million cash coming in upon closing, which they closed it on, if I'm not mistaken, was February 4th or something like that. But I know sometime in February. I apologize. I should have looked up the date earlier. So that $8 million cash will actually come in. So what's going to happen is, be mindful. I already know, in my opinion, this is what's going to happen. So let's just say they get 140 million, just for simple math. 140 million, that $80 million comes in, we're looking at $220 million. So ideally, you would say that technically, and it could be taken like this case, it depends on how the analysts interpret this completely. So if it's 220 million, then technically they have year-over-year growth, quarter-over-quarter growth, beat their outlook, beat street estimates, and it's all awesome. The problem is technically what you should do, and I'm expecting this to happen anyway, is take that 80 million out the picture. Now it will still obviously be coming in as total BlackBerry revenue. The problem is if you want to truly look at year-over-year comparison and all that stuff, then you ideally want the 80 million taken out, and then alone is 180 million we're at. So technically total company revenue, if it were at 260 million minus the 80 million and we're at 180 million only baseline, that would be the most ideal situation. So if they somehow hit 260, then that's great, or not even 260, it could be a little bit less, right? 7 million less. It doesn't have to be exactly 180 million. It could be 174 million or something like that. As long as we see growth. And the biggest heavy hitter, in my opinion, is the outlook that they provide. So in Q4, they end up providing the full fiscal year guidance, basically what we could expect for the full fiscal year. Not 100% accurate, obviously. There's a range. But this will be the most important number in my opinion, unless they end up destroying the basically Q4 earnings numbers, which I'm not expecting to. In my opinion, this team is doing a phenomenal job, and hopefully that continues, hopefully, right? But yeah, so just be aware of that. Technically, the initial numbers that will be coming out, in my opinion, I think will look phenomenal. But if you break it down, taking out Cylance from the amount, then that will be a different reflection of the overall thing. So there's that. Now, in terms of the breakdown, so IoT revenue, they're expecting IoT revenue come in 60 to 65 million. And if you compare that to the previous quarter, again, Q3, then you're looking at a pretty much flatline / increase. So 62 million for IoT for Q3. And if they come on the top end, it'll be quarter over quarter growth. And then for Q4, so last time, same year, they had 66 million. So technically they would have to pass 66 million. Otherwise it's going to be pretty much flatline or a slight decrease. So either year-over-year decrease, depending on what they hit. So if they hit 67 million, they have year-over-year growth and quarter-over-quarter growth. If they hit, let's say 65 million, then they have year-over-year decline and year-over-year or quarter-over-quarter flatline, I believe. Or what was it, 62 million, just to make sure. 62 million, so it'll be quarter-over-quarter growth. So quarter-over-quarter growth, year-over-year decline, unfortunately. So these are the numbers hopefully they end up surpassing on. I would say the most heavy hitter, personally, would be the total BlackBerry revenue. But we want to see IoT grow because I'm thinking secure communications growth is not necessarily faster than IoT from what they've been communicating. But who knows? Every quarters are completely different. Not completely different, but somewhat different overall. And then secure communications revenue, 62 to 66 million. Obviously, this one's going to be taking the biggest hit because Silence is out of it right now. But let's just say on the top end, 66 million. And for Q3, we had about 93 million. So for Q3, 93 million, it is obviously quarter-over-quarter decline. And then last year's cybersecurity came in at 92 million. So we also have a year-over-year decline. So year-over-year decline, quarter-over-quarter could decline. But again, Silence is taken out of this. And then also keep in mind, even though technically these numbers don't look great from what they've forecasted, the analysts are aware that the Silence portion is taken out. So there has to be lower adjustments nonetheless, because this amount of revenue had to come from somewhere. And if you took a portion out of the business that has these revenues coming in, then they would have to be made up from other portions of the division as well. And that's going to take some time. So the analysts are adjusting for this as well. It's not like they're looking strictly at the numbers exactly. And then licensing revenue, approximately 4 million, which I believe when I looked at this, it was a little bit low on the bottom side as well. So if we're looking at Q3, right about here, we're looking at licensing revenue 7 million, so quarter-over-quarter decline, and then 15 million last year, Q4, 15 million. So year-over-year, quarter-over-quarter decline. These numbers don't essentially look great, unfortunately, right? But again, it's more focused, in my opinion, what they're going to provide for the full fiscal year on Q4 earnings. This one's just showing previously, but if you look at Q4, there's a whole picture, and this is what we're looking at. So I'll go over this one actually too. So last year for fiscal year 2025, they provided basically in the top range 616 million, but in lower range 586. Then they ended up adjusting it to 517 million to 526 million, right? So in essence, they're getting about 530 million, just say basically rounded up. And that is a year-over-year decline if you looked at last year's numbers. Now, last year's numbers, they came in at 853 million. So last year when they reported Q4 earnings, they wrapped up the fiscal year and stated that they got for the full fiscal year 853 million, which is quite massive. But if you remember, they sold the patents and they got 218 million from that. Subtract 853 million subtract 218 million from the 853 million, you have about 635 million. So 635 million compared to Q3 earnings, not Q3 earnings, but in the Q3 earnings, they gave a roundup of what essentially wrap up of what the fiscal year will come down to, and it's 526. So it's a year-over-year decline in terms of total company revenue, which is unfortunate. But in terms of this Q4 coming up, if they somehow provide a substantially higher number, that would be ideal. Now, obviously, by the way, this is going to have to be adjusted because when they gave out these numbers, they didn't have the Silence deal included with this. So if it was, let's just say 530 or something like that, plus the 80 million, looking at 610 million, right? Which still falls short of the previous year of 635 million. But the thing is, you can't add that. I'm going a little bit of a tangent, sorry about that, but you can't add that because you're not also including the patent sale. Because if you were adding the patent sale, then you're including everything as a conglomerate, and we had 853 million, so quite a drop overall, right? So you have to assess things as they come in overall. But either way, so hopefully we get some massive number for fiscal year 2026, and that, in my opinion, will be the most important thing. So hopefully we get something in the 700 million range, 800 million range, 900 million range, and so on and so forth. The higher the number, the better overall. So there's that. So street estimates are aligned basically from what they provided on the outlook. They're aware in terms of Silence, obviously representation of the outlook, because if they weren't, then their number would be higher than 137, 138 million. So that is good. That is a good check overall. And then next thing is I want to go over the what is called. By the way, for the Arctic Silence, just in case you guys are wondering, it's $80 million right now at the close, but 40 million later on, and so on and so forth. Plus they got 5.5 million shares. I've already covered this in the past too, but I just wanted to state that it's more than just $80 million in general, but this is just for the time being at the close, right? But now in terms of the video, I'm going to play this video and then I'm going to come back to it, but essentially he covers the safety portion. I want you guys to focus on the safety portion for the most part, but you can see that this type of business is growing overall, which is phenomenal. And in essence, it seems like NVIDIA is the one that's most focused on safety, which a lot of companies tend to work with NVIDIA, which is awesome because that will mean more business for BlackBerry, hopefully.
The time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car. So AI infrastructure for GM, partnering with GM and building with GM their AI. So I'm super excited about that. One of the areas that I'm deeply proud of, and it rarely gets any attention, is safety, automotive safety. It's called halos. In our company, it's called halos. Safety requires technology from silicon to systems, the system software, the algorithms, the methodologies, everything from diversity to ensuring diversity, monitoring and transparency, explainability. All of these different philosophies have to be deeply ingrained into every single part of how you develop the system and the software. We're the first company in the world, I believe, to have every line of code safety assessed. 7 million lines of code safety assessed. Our chip, our system software, and our algorithms are safety assessed by third parties that crawl through every line of code to ensure that it is designed to ensure diversity, transparency, and explainability.
All right, so that was a good clip. I think that's pretty awesome. And I'm going to go over the NVIDIA key points, but one thing I forgot to mention, or actually I'll get back to after the NVIDIA thing, is the Q1 outlook that they will provide as well. And if you look at last year, or fiscal year 2025 Q1, total company revenue came in at 144 million. But I'll come back to that as well because these are numbers that we need to pass overall. But the most thing is, if we're looking at a press release dating back since January 10th, 2018, we see that NVIDIA announces world first functionally safe AI self-driving platform. Today announced, let me see, there was a couple things. So NVIDIA today unveiled details of functional safety architecture for an NVIDIA drive. And then if you click on this, it opens up the page for basically everything encapsulated under NVIDIA Drive, which is the, like for example, NVIDIA Halo, so on and so forth, and all safety. So BlackBerry's in that mix as well overall. It's AI autonomous vehicle platform, which uses redundant and diverse functions to enable vehicles to operate safely, even in the event of faults related to or operator environments or systems. The NVIDIA Drive architecture enables automakers to build and deploy self-driving cars and trucks that are functionally safe and can be certified to international safety standards such as ISO 26262. Safety is the most important feature of self-driving cars, said Jensen Huang, founder and chief executive officer of NVIDIA, so the guy CEO who spoke. It is imperative that it operates safely even when things go wrong. NVIDIA investment into this financial safety platform is one of the most important ones we've ever made, and it provides a critical ingredient for automakers to bring self-driving cars to market. And then there's a bunch of things listed, and I just wanted to show one thing. So basically, software integrated world-leading safety technology from key partners. NVIDIA Drive OS system software integrates BlackBerry QNX 64-bit real-time operating system, which is ASIL-D safety certified, and along with other partners, and et cetera, et cetera. And then if you look on the website, there's just a couple run things through. Again, this is like NVIDIA Drive and the whole entire systems that is encapsulated with it. And we see NVIDIA Halos right here. NVIDIA Halos extends this safety-first approach by providing guardrails across design, training, validation, and deployment, setting a new industry-leading standard. And then if you look, click on the Partners tab, which I already did. Actually, I'll click on it right now. So Partners tab, it's going to be a little bit, you have to basically wait. So it goes through the partners that it's working with, and it's going to scroll down at one point. I try to scroll, it can't scroll. It's probably about like 15 seconds if you want to check it yourself, right? Just go down here and go to partners and all stuff, and you'll see QNX pass by, and NVIDIA and BlackBerry are still working together and all stuff, et cetera, et cetera. So I think that's quite significant in my opinion. And then I'm going to go to press release. I haven't seen it yet, but again, it is here overall. guaranteed. I've already seen myself, and then you could look it up too as well. Again, I'm not a professional, so please do own due diligence and research before buying and selling. And I do own shares in the company, so be mindful of that while you're watching this video as well. Now, in terms of earnings, I'm just trying to wait to see if it's going to pass by, but it hasn't passed by yet. Now, in the terms of the Q1 earnings, right about here, the one thing that you want to look at, because when they provide the Q4 earnings, again on April 2nd, 2025, for fiscal year 2025, they're going to provide a Q1 guidance as well. Now, what we want to see is something that's going to surpass this 144 million, because Q1 for fiscal year 2025, and this time around it's going to be for Q1 for fiscal year 2026, total company revenue was 144 million. So we want to see something higher than 144 million. You could argue maybe we could still see something a little bit less, and in terms of analysts, they'll be fine with it because the science portion is taken out. So that revenue will be taking a little bit of a hit for the time being, and then start gradually growing, so arguably so, but ideally you would want to see something higher than 144 million. And then in terms of IoT, the guidance, you want something more than 53 million, but that's a little bit tricky because you still want to see, like, for example, previous quarters better and all stuff. So for example, this quarter, for the quarter coming up, they're expecting 60 to 65 million. And we saw on the high end of Q4, I think it was Q3, it was 66 million. So ultimately you want to see something higher than 66 million for the guidance that they're going to provide for Q1, even though Q1, what was it called, for fiscal year 2025 came in at 53 million. So even passing 53 million, in my opinion, is nice because you show year-over-year growth, but I would ultimately want to see continuous growth overall, which would mean surpassing the previous quarters as well. But again, things come in cycles, so it's debatable. It all depends on the cycles and then how the analysts take it, basically, in essence, because they go through this like a fine brush comb kind of thing, right? So there's that. We'll see. But in terms of cybersecurity, again, the silence portion is taken out, so this one definitely will take a hit. Hopefully the IoT portion doesn't take a hit. At least we see growth on that front. But the cybersecurity, I'm pretty sure there's going to be a hit for sure. But previously in the Q1, it was about 85 million. And then for the guidance that they provided is about, for this quarter, Q4, is about, what is it called? 62 to 66 million. So even if they do hit that number, let's just say 66 million, and Q1 was about 85 million. So we would want to pass somehow about 85 million, get 90 million or something like that, and not be lower than 66 million overall for the next earnings coming up in Q1. In terms of the outlook, just to be clear, this is for the outlook that they'll provide during Q4 earnings for Q1 fiscal year 2026 for this one, right? And then again, surpassing the 144 million. I would say the most important thing is this one, the 144 million, making sure that we have year-over-year growth versus Q1 of fiscal year 2025. So there's that. And now in terms of the technicals, I'm going to go over here. Hope you guys like the video so far. Hope you guys enjoy it. If you do, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. Now, in terms of the stock, we closed at $4.47 US. The stock, in my opinion, is moving pretty well. It's not too bad because we've had some pretty decent red days in terms of the market. Now, obviously, we did bounce back up. It wasn't a massive move up on BlackBerry's side, but nonetheless, it's been holding out pretty well, in my opinion, especially reflecting the graph overall, because it looks like it should have been even more drops, but it pretty much held through. And there's been a level, I think I showed on last video. It was a low $4, provided a good amount of support multiple times, and resistance as well. So the low $4 did hold quite a bit. Now, if you look at the 1 year chart, this MAC line indicates if we're in a bearish or bullish movement. Right now, it is in the bearish movement. We can see volume decrease. So hopefully the selling has subsided, and now we're going to actually cross over to a bullish movement for the time being. Now, you could argue the data points were predominantly more on the sell side, but the market was red, waiting in anticipation for the Fed's interest rate decision. And then now, as of late, it's been green, but I would say take this as a grain of salt, though, for the time being, because the market did bounce back up towards the end of the day after the Fed's meeting, right? And the Fed decision, all that stuff. So we have to see the next data point to see if this will hold true later on. But in my opinion, I think it will be leading up to the earnings. But at the same time, this is just my opinion. Again, not a professional, so please do your own due diligence and research before buying and selling. But if you look at the 5 year chart, the MAC line is in the bullish movement, but it looks like shortly soon it'll cross over to a bearish movement, indicating potential downside. Now, it doesn't necessarily have to be crossing over to the bearish movement. There's been times that we were about to cross over to a bearish movement, but then continue to the upside, but nonetheless did dip down a little bit, right? But you could argue we've already dipped down quite a bit, and then now it's the time to go back up. And then there's been times that are short-lived drops into the red moment. So if I were to take it as a sign personally, since the 1 year chart is more pointing to the upside, or coming to the upside potentially, not a guarantee obviously, right? Just like the bullish movement could potentially not cross over to the bearish movement, then the bearish movement could not necessarily cross over to the bullish movement, if that makes sense, right? But in my opinion, leading up to earnings, potentially if there's no news or anything, or not massive volumes coming in, then what will probably happen is the share price will pretty much be flatlined for the most part, give or take between $4 to $5. And then that's when we probably cross over to the bearish movement a little bit, like we saw earlier here, a small little bit crossover to the bearish movement, and then ultimately heading back up overall anyway, nonetheless, once earnings are released. And hopefully it's a great earnings. Hopefully, nothing's guaranteed obviously, right? But ultimately I think the stock is heading up higher anyway, because if you look at the alt chart, the MACD line's in the bullish movement, and the movement is quite significantly up to the high side overall. We don't have that much resistance going up to the upside, if that makes sense, because most of our resistance is in the, give or take, like in the $6 range or something like that. And then even at the 830, like once we pass that, we don't have quite much resistance. But then at the same time, there's like a little bit of an issue because we had that GameStop run up. There is a lot of people with different multiple entries, which will cause us resistance as we go up. Because for example, a lot of people might want to start unloading potentially, but I would say majority from the posts I've seen, majority of them are in the $16 to $17 price point. I don't think a lot of them are on the lower side, and if they were, I think a lot of them ended up averaging down anyway. So if they were to exit, it would have been probably anytime soon or something like that. It all depends. It all depends for the most part, obviously. But for the most resistance, so for example, the 5 year chart, just to show, right about here, we're moving towards the 200-day moving average. Now we did pass it earlier, right? Back in February of 2025, mid-February, but we got back underneath it. You could argue it's because of the market as well, because it was coming down, but debatable. But either way, we're looking at resistance for sure at the $5.34 US, and that is the 200-day moving average of the 5 year chart. And if we go to the alt chart, we have these two heavy hitters right about here. And this one definitely should be something because we ticked up to it, but then we came back down. And I think this is essentially a false breakout. But either way, the 50-day moving average is $5.59. And then the 100-day moving average at $6.89. Now, I would say that $6.89 we're in the clear, hypothetically, but that's not going to be the case. I think I remember I checked horizontally, and it was pretty much around like $8.30, $8.50, maybe leading up to the $9. And then potentially we could start heading up higher completely. But the problem is, again, like you could see horizontally a bunch of times between $12, $11, and then plus where people started, for example, loading in and then not getting out or getting stuck, and they ended up becoming big holders and then did not decide to average down. If they average down, it's a different situation. And then they could be profitable at some points, and then they might not feel like the need to unload and not continue to wait. But if they ended up, for example, only buying at $16, $17, then their initial reaction might be, if when we get to $16, $17, is to just unload their shares. So it all depends. It depends because, again, obviously this whole entire thing is by supply and demand. But we'll assess it as we go. But overall, in my opinion, the stock is heading up higher. But again, I do own shares in the company, so be mindful of that. Just because, again, the movement's been pretty much on the upside, plus the MACD lines are indicating further upside, except for the 5 year chart showing potential stagnation, right? If earnings is horrendous, because this is the thing, if earnings is horrendous, this will be solidified more to the downside. I don't think that's going to be the case, though. Again, that's just my opinion. In terms of short term, though, 1 month, 3 month, and 6 month, I think they're all bullish though. 1 month is bullish, but it's a little bit on the low side. It's not crazy. 3 month is bullish as well. Not really crazy. I wouldn't say it's crazy movement. It's almost like really solidifies the fact that we might be pretty much flatlined all the way up to earnings unless something comes out like crazy. But then the 6 month, you could argue it might be leading up to a big, decent run up to the 200-day moving average, which is right about here. 200-day moving average for the 6 month, which is about $4.92. So showing $4.92. So we could leading up to that before earnings and then pretty much getting capped by the $5 until after earnings, if that makes sense. I hope it goes higher because I do own shares in the company, obviously, but this is just basically from what the chart's showing for the most part. But that's basically it for today's video. Hopefully I didn't miss anything. I try to jam-packed as much as I can. Hopefully you guys enjoyed it. If you do, consider dropping a like. It does help with the channel, so thank you so much for that as well. And then be mindful that, or not mindful, I will be live streaming the stream, so be on the lookout for that. And that's basically it. Thanks again for watching. Take care. God bless and peace.